Hello guys, welcome back to my channel. Today we are going to discuss about how to trade triangles, how to spot them, and how to trade effectively, basically, because there will be triangles forming very frequently, and not all the triangles will be successful. There are some things that you have to understand so that you can filter out the wrong trades. Okay, so as we normally do, we're going to do a question round here. So here it is. So this is the chart that you are looking at. Pause this video and just spend a few seconds understanding what the price is doing, and can you spot where the price would go? Will it drop to A, or will it drop to B, or it just goes up? Okay, so that's the question for you. You can pause it and then analyze a bit over there. Okay, so moving on to a topic here. So by the way, I'm going to tell you what happens next sometime during this video. Okay, so triangles, before getting into that, let me just give you the concept of what a triangle is. Okay, so let's take this. Let's assume the price is moving something like this, like, you know, it's kind of in an uptrend or something, and then price drops again, and then, you know, bulls try to take the price higher, because that's what they normally do, make the prices higher high and higher low. So they tried that, but they fail to print a higher high, and bears come into picture, and even they fail to print a lower low. Okay, and now bulls, it's their turn. They try to take the prices higher, they fail, and then the bears, they fail, and then there is not much activity going on. This is kind of important. I'm saying there's not much activity going on because not many participants are taking part in this particular scenario. Okay, the volume just dries up usually. Okay, and then this is where you start analyzing what's happening. If you can see here, the bulls try to take the prices higher but failed, and the bears also failed to take the prices lower. Okay, so, and if you see it from the positive side, the bulls defended their low, and if you see it from the positive side of the bears didn't allow the bulls to take the price or print higher high. Okay, so that's the whole thing. And during this kind of pattern that is building, the volume usually dries up, because not many people will trade in this kind of situation because there is no clear direction. Okay, so now if we see here why this pattern is called triangle, is because if you see here, it kind of prints like this. Okay, if you join the lows and the highs, you see it's kind of in a pattern, the triangle pattern, right? Okay, that's what is happening there. And to make it more clearer, we can even draw. I mean, initially you could start doing this as well. You can take the triangle tool and draw. Basically you go there and then this. Okay, so it's kind of in a triangle. That's the reason it's called a triangle pattern, and these are very effective, let me tell you, but you should have proper patience, and then your entry should be really good. Once you hit that, I mean, if your entry is really good, these can really, you know, explode in one of the directions. Okay, it can come down and then goes there and then comes down again, maybe, sorry about that, and comes down maybe again, and then just shoots up like this. Okay, so that's the reason people like these triangles. These are formed very frequently as well. It's not like an uncommon pattern. You find this on many time frames, on all the time frames basically, and then of course the reliability of this pattern is higher when you trade on a higher time frame, something like 1 hour or daily or weekly, and the reliability just drops anything below the time frame, whatever it is, 30, 15 minutes, 5 minutes, it just drops down. I'm not saying it won't work in those on those time frames, but the probability just drops down. That's what I think. So this is the concept. Okay, so basically the bulls and bears both are kind of, you know, not settling for any price, and then there is no proper momentum with both of them. That's what you are looking out for in the chart. So let's go to the chart now. Okay, I've identified some of them to for this particular video. Okay, one is I think it's Axis Bank. Yeah, let's go to Axis Bank, and I'm going on to daily time frame, okay, and I think it was in 18, okay, in 2018. I see here. I mean, it might take some time for you to get trained to spotting these triangles, but once you practice, it's all about practicing, okay? Once you start practicing properly, and really it's going to be very easy for you. It's not going to be tough. And what I normally recommend, especially for identifying the triangle patterns, is not the candlestick chart, but you could go to line chart, which will be much more easier to spot. And then why I'm saying that is, many people find it difficult to draw where the highs and lows, there'll be really a dilemma for many novice traders, whether should they draw from the highs considering the wicks, or should they consider only the bodies. So these kind of things they'll be having. So what I simply suggest is just go to line chart and draw the highs and lows. That's all. Okay, in this situation, if you look at this, you could draw something like this. It's slightly tilted triangle, I know, but they also do work. It's not exactly like that. You see here, something like this. And then you can switch over to candlestick charts, okay? And on candlestick charts, you could even draw it from here, so even that's also fine. So what I mean by that is, just with the support and resistance zones, trend lines, these are all zones actually. It's not exactly the lines, okay? That's the reason you have to be a little bit flexible about that. It's all about concept and understanding, and understanding the behavior of the market. That's all. That's the main focus that you should be putting your efforts on, okay? Understanding the market behavior rather than exactly looking for this particular pattern, and as you can see here, is we draw what we discussed, price just drops here, goes up, drops here, goes up, drops here, goes up, and then after some time, it just breaks out. After spending some time, it just breaks out. That's the reason I'm saying that you have to understand the market behavior. It's not like it's going to do this all the time. It's just going to pop out like this all the time, okay? It just gives you what the market wants to do. It tests the patience as well, sometimes by just hovering around that area and then shooting up. And if you look here, prior to that, we clearly see kind of a uptrend, right? It was in an uptrend, and then it started coming down and then formed this triangle. Okay, so this is how you're going to spot. That's one of them that you can see. That was Axis Bank daily time frame, and it was in 2018. If you want to go back and check once again, and then look for more details, basically. The other one is BPCL. It's on 1 hour time frame, and it's kind of happened recently. If you see here, right, as we do, we go to line chart, and as you can see, it's pretty much easier now for you to spot, right? So if you go here and draw something like this, this is what I am referring to, okay? So don't worry about how it looks and everything. If you just extend this particular line here, it just becomes much more triangular. If you want, you can do it like this, which looks more of a triangle, but I'm just joining the lows and highs, okay? The concept, I want you to focus on the concept rather than the picture itself, okay? So now if you see price dropped here, it just spent some time there and then tried to go up, failed, and then this happened, and then it spent some time there and then shot up, and then it came down and then started going up. So you can go back and refer to this chart to get more details about this, but as I said, it's just about how the market is behaving at this particular point. So the concept is bulls unable to print higher high and bears unable to print lower low. So there will be a squeeze, okay? That squeeze is going to form a triangle here. That's the whole concept. Whenever you see bulls failing to make higher high and bulls failing to make lower low, then you are looking for some sort of a triangular pattern there, and as I said, the volume also dries up usually during that period, and then there'll be a spike in the volume as well as soon as it breaks out, because most of the traders who are on the sidelines, they don't want to trade in a range market, they want to trade in a trending market. That's the reason the volume dries up, because there is no clear direction to which side the market is going. Now the final one, I'll go to Bharti Airtel, and that was also in 1 hour, and it's somewhere in February. I have written down here. Alright, if you go to line chart again, and you can see very clearly how this thing is happening, right? You see the same thing over and over again. It's just about, don't worry too much about whether it's exactly touching that point or not. It's just about bulls unable to print higher high, bears unable to print lower low. That's it. And it spent some time, and then boom, it came down. It's a low risk, high reward. Why would I say it's a low risk? Because if you enter somewhere here, let's say you enter somewhere here after the breakout, and then your stop loss just goes above the triangle there, or the recent swing high, and your target could usually be 1:2, or you can also look for the previous swing support and resistance basically, or you can go with 1:2, or you can just trail your stop loss, or you can just analyze the market as and when it is printed. It's on 1 hour. You can see if there has been any change in the market behavior, and then close your positions if you are in front of the computer all the time. So it's up to you, but usually they go with 1:2 risk to reward ratio. But if there is a very strong support or resistance, it's better to close just around that area. Okay, and as you can see here, the volume also kind of dried up here during that phase, and then there will be a shorter spike in the volume as well, right? So that's the thing. So now I know most of the traders or who know something about these triangles say it's very easy to draw these triangles after the chart has been printed and then it has moved and all those things, but it's very difficult to draw and identify and spot them and take the trades in real time. Okay, so I understand, because I'm also a trader. I know what you think. I have been through all those things, so I'm going to sort that problem out for you. We are going to look out for some of the live charts which are just about to print these kind of patterns. Okay, sounds good. Now before doing that, let's go to our picture here. The question that I asked, see, is the price going to drop to A or B? That's the question I asked. And or is it going to go up? So now this question is kind of related to our topic here. Okay, so if you see here, I think I haven't opened it. Okay, let me just show you. It's not there. Okay, if you see here, price dropped here, and then bulls unable to take out these highs, and bears unable to take out the lows of A's, and then it's just kind of forming a triangle pattern, and the volume has dropped, and then there has been a big spike. So what's your answer to this one? If you said it's going to hit A, then okay, let's see what happens next. If you see here, it did come down a bit. Okay, it was here, it did come down to A and then started moving up. So now let me tell you why this has happened. That's the reason many traders actually get trapped. They think they are doing good, and if you are a seasoned trader, you have to book your profits here for many reasons that I'm going to tell you now. If you're a novice trader, you would think, okay, you have taken the trade here and your stop loss goes up there, it's 1:2, so I think I have to wait till B, and then wait, and eventually you start losing the money because the price just goes up from there, and very quickly it goes up. So it's kind of you tend to lose money on this, even from the winning positions. If you have seen my previous video about Infosys and LTI, of course they have gone against what I have thought, but that's okay. It happens some of the times. As I said, I take care of my risk more than the reward. Okay, I want my profits to be protected at the same time, so I don't mind losing some of the winning opportunities. That's okay, because the probability was down. It went really well against me, and it kind of disappoints you when you miss the chance to make good profits, even when you're in position, taking the positions. But as I said, in the long run, that's not going to sustain. Okay, the sustainable thing is protecting your risk, understanding what the risk you are taking, and how you trade, because opportunities, it comes every day, every minute. Okay, you don't have to worry that if one opportunity is missed. That's what I want to convey you. And if you haven't watched that video, it's a good video, about a good learning video as well, the psychological part. The previous video that I posted is about live trade in INFI and LTI. Okay, I closed the positions, and I've given you all the reasons, but it went up, and that was in my favor, and I would have gained a lot more if I held on to that positions. But as I said, it's about the consistency and sustainability in the market. Right, so this is what happened. So now if you can see here, to improve the accuracy of your triangle pattern trading, it's always good to go in the direction of the prevailing trend. In this scenario, the prevailing trend was uptrend, right? It was going up, and then it's making a nice swing high, right? And you see here, and the prevailing trend was uptrend, so it's better to anticipate the breakout in the direction of the prevailing trend. I mean, it won't happen all the time. I'm going to tell you some of the points that you can actually look out for. Let me just open a text here for you. These kind of small tips going to improve your accuracy, okay, success ratio when you're trading patterns, triangle patterns, or any sort of patterns. Okay, so now if you go here, the first thing that you can do is try looking for breakout in the direction of the prevailing trend. Okay, that's one thing you can do. The other one is, if you really want to go against the prevailing trend, see if existing trend has come to exhaustion, okay, that it is about to close its existing trend. Okay, see if that has happened. If any of these situations, then you can go with the against that existing trend. Otherwise, I would prefer going you with the prevailing trend if you think there is still some room left to continue in the direction of the trend. Yeah, sounds good. So now those who have already seen some of the videos or know about the triangles, you might be wondering why I'm not saying about ascending triangle, descending triangle, and equilateral triangle maybe. Yeah, so in simple words, yeah, I'm aware of that. I know what it is and those. So you can simply call this as a like the normal asymmetrical triangle or symmetrical triangle. I don't know exact words. I think it's symmetrical triangle. Or you can go with the ascending triangle, which would look something like this, where the tops are being hit and then the higher lows are being printed by the bulls. Okay, that's ascending triangle. And the other one is like the opposite, which is the descending triangle, wherein you have fixed low here, and then the bottoms are being hit several times, and then bulls printing bears printing lower highs all the time. So the price just moves. The one that I discussed moved somewhat in this fashion, like a symmetrical triangle fashion, and then a breakout. That's one thing. The other one, as I said, it's moves something like this. It keeps hitting the top, at the same time bulls are printing higher lows. Okay, so the bears are defending the highs, and then bulls are printing higher lows. That's one thing. And the form, which is the opposite of that, the bears are testing these lows but unable to break that, and the bulls are printing lower highs. So I don't want to generalize these things actually, because many people try to generalize these things, and they say if it's printing this ascending triangle, it's going to break out to the upside, look for the breakouts, and if it is a descending triangle, look for the breakout to the downside. Okay, so that's what they do. But again, it requires you to backtest, because I don't really look at these things as like that. I look at more of a prevailing trend. Okay, if the prevailing trend is, say here it says it's going to come down, but what I would say is, if the prevailing trend is uptrend and then this triangle is formed, then I really don't want to sell this. I look for buying this and look for anticipating the breakout to the upside. You see what I mean? And if the prevailing trend in this one is basically a downtrend, which is something like this, and I look for selling this rather than, you know, buying this, even though if it was a ascending triangle. Even it goes with the same. So that's the reason I didn't really specifically mention whether it's an ascending triangle or descending trend, but I mentioned that understand the prevailing trend. Okay, based on that you can do, and that is the best way of trading the triangles rather than looking at ascending. Okay, it's going to go up, descending it's going to drop down, or break down to the downside, something like that. I hope this is clear, and as I said, I understand your problem. Basically, you know, we can easily draw these triangle patterns once the chart has been printed and the breakout has happened and the close and everything. So for that reason I'm going to show you some of the current pattern formations that are actually live, okay, happening live. And let's go to the first one. It's the Asian paint, and you can just use this as a swing trading opportunities as well for the next week that I'm going to watch out for. Asian paints, I'm on 1 hour chart, and as you can see here we go to the line charts and we are going to draw these triangle patterns very simply like this. Don't worry about ascending, descending and all those, like this. Okay, so according to our rule, what we normally look out for, the existing trend is up, right? It's kind of in a clear uptrend, very strong uptrend. I don't want to sell this stock, and I don't think it has reached the exhaustion. That's the main thing. If you want to go against this, it should have reached the exhaustion point. If you go to daily, and let's switch over to candlestick charts, if you see it's printing higher highs, all-time highs, okay, it's breaking all-time highs. Why do you really want to look at the it has exhausted? I mean, if it comes down, that's fine, but I'm not going to trade in the direction of the downside. Okay, I'm looking for a breakout to the upside in Asian paint. So you can watch out this one, this particular stock. And here also, as we can see here, the price is just moving within this triangle pattern, and the volumes, yeah, it has slightly come down, I would say, not drastically but slightly come down. Okay, so this is the stock that you can watch out for. And the next one is Bharti Airtel. This one I'm going on to daily time frame. Okay, and if you see here, if you go to the line chart, it will be much more easier for you, and if you prefer the candlestick itself, that's fine. If you're comfortable with that, whatever that is you're comfortable with. Okay, so let me just do this properly. Okay, so this is how you draw, and you see here it's just moving up and down within that range. Let me just put our theory into practice here. High and low have been printed, and then higher high has not been printed, lower low has not been printed. It's just within this range, so it might spend some time here like this and then, you know, break out. And here as well I'm looking for buying opportunity, buying opportunity rather than selling opportunity. Why? Yeah, you said it right. It's because the prevailing trend is up. Okay, and to take the trade to the downside, has it reached the exhaustion? Maybe, maybe not, I'm not sure, but I would prefer going long in this because I think it can still go up from here. So that's the thing. If you think differently, you can obviously, you know, take the trades according to your assessments basically. And as you can see, the volumes have dropped here as well. You see, the volumes have dropped. That's one more thing. Now the another stock, sorry if I'm going fast, but you just have to pause and, you know, or watch this video again, because there are plenty of stocks that we have to cover. I don't want this video to be dragged for too long. Okay, because I just want to get you know the concept right, and I'll probably, there are some more in my list here, but I'll go through 1 or 2 more stocks and then stop it there. Okay, Hindustan Unilever, and then I will leave it. As I said, there are some more stocks left, and I will leave it to you to identify those stocks, because that will help you train your eyes in spotting the triangles. Okay, Hindustan Unilever, again daily chart, and we are looking for triangle patterns here. See, this is what I'm seeing, and the price is just moving within that area. And volume wise, I don't see much change here actually. Maybe some, if you go to 1 hour, maybe we can see some things here. Yeah, so you can slightly adjust the triangle as well if you want to, if you go to the lower time frame, and then you could draw something like this. But anyway, the concept is just this: bears unable to print lower low, bulls unable to print higher high. So there is a squeeze in price, and then it's going to break out, because it's just like a spring. If you keep on compressing it, and then once if you leave it, it just explodes in one direction, right? That's what happens in this particular thing. The price getting squeezed, and then there will be a sudden momentum. So that's the reason you can gain very quick returns from these kind of triangles, and that's why it's kind of trader's pet as well. It's trader's favorite, this particular pattern. Don't worry about ascending triangle, descending triangle, or symmetrical triangle, asymmetrical, I don't know, but just focus on this particular thing. Okay, so let's go to the last stock here. It's Kotak Bank. As I said, there are some more in the list, but the video is getting too long here, so I want to stop it. Let's go to, okay, we are on 1 hour time frame, and if you go to this, and if you see here, this one is a bit tricky. Okay, it's kind of dropping here and then doing this. Okay, so it is still within this triangle here. Why I'm saying this one is a bit tricky is because the whole thing is within a range actually. Okay, you see these two things, and I'm looking for a breakout to the upside. Why? Because I think it has come down here, and as I said, it's about exhaustion as well, right? So in this particular thing, it's been coming down quite nicely, and then it's in a range that shows like the downtrend is kind of coming to an exhaustion. Okay, that's the reason I'm looking for buying opportunity in this once it breaks out. I mean, this one is a bit tricky. You have to be a little bit careful, because it can just hit this, and then because it's in a range, that might affect the price movement. But on the contrary, because it's a breakout of both the things, the mini triangle at the top and then the big range here, so you just imagine if it breaks out of this, the next target is very likely to be this one here, right? So you got a very nice risk to reward ratio. That's the point that I'm looking out for. And if you see the volume, it's just kind of dropped as well within that range. I hope this video helped you guys. Like it and give me a thumbs up, and also subscribe if you haven't done yet, and also share with your friends, because these things kind of motivates me to produce more content that's kind of helpful to you traders and also to others. And also join my free Telegram channel. The description is about the Telegram channel is in the description below, and share with your friends. I hope you like this video. Thank you guys. See you soon.